When most people think of crime, they picture dark alleys, police sirens, and masked thieves. But some of the biggest financial crimes in modern history didn't involve guns or getaways. They happened inside glass towers by people in $1,000 suits with nothing more than a keyboard. For nearly a decade, they quietly manipulated the global silver market right in front of everyone. To understand how insane this story is, you first need to understand silver. Silver isn't just some shiny metal. It's inside your phone, your solar panels, and medical equipment. It's both an industrial necessity and a financial asset traded globally. But here's the twist. Most silver trading doesn't involve real silver. It happens through futures contracts, basically bets on where the price will go. And this entire system runs on one thing: trust. Now imagine this. You're at an auction. You want to buy something, but it's too expensive. So you hire people to shout massive fake bids, creating panic. Then right before those bids are accepted, they disappear. And suddenly, the price drops. You step in and buy cheap. That's exactly what was happening, but instead of people, it was algorithms. Here's how the strategy worked. Step 1. Place a real small order to buy silver at a lower price. Step 2. Flood the market with massive fake sell orders. These orders were so big, they made it look like a crash was coming. Step 3. Algorithms panic. Prices drop instantly. Step 4. The real order gets filled at a cheap price. Step 5. The fake orders vanish in milliseconds. And just like that, the price snaps back. Profit secured. This wasn't a one-time trick. It happened thousands of times over years. It became routine, a system, a machine. And here's the part most people miss. Every trade had a victim. A miner forced to sell at lower prices. An investor losing money. A retirement portfolio shrinking. This wasn't just market activity. It was systematic wealth transfer, from the many to the few. So how did this go unnoticed? Simple. Speed. These trades happened in milliseconds. Too fast for human eyes. Too fast for outdated systems. To regulators, it just looked like normal volatility. But behind the scenes, it was controlled chaos. Eventually, technology caught up. Advanced data systems started analyzing billions of trades. And suddenly, patterns appeared. The illusion cracked. And once investigators dug deeper, they found something even more shocking. Internal messages, openly discussing manipulation, joking about moving markets, teaching others how to do it. What followed was one of the most aggressive financial crackdowns ever. Massive fines. Criminal charges, public exposure. But here's the real question. Did it actually change the system? Because for nearly a decade, silver prices were artificially suppressed, and that has consequences. Low prices discouraged mining investment, supply didn't grow. But demand exploded. Now we're in a completely different world. Silver demand is surging. Solar energy, electric vehicles, electronics. But supply still catching up, and that imbalance is starting to show. This story reveals something deeper. Markets aren't always free. They can be influenced, distorted, manipulated, but only for so long. Because at the end of the day, you can fake orders, you can manipulate charts, but you cannot print physical silver. Eventually, reality catches up, supply meets demand, and truth overrides illusion. The only question is, when? If you want to understand where silver goes next, and how these hidden forces still shape the market, make sure you subscribe, because this story isn't over.